everybody, and welcome to Global Connections. This is the fourth in a new monthly series at Peterson Institute, where we discuss with leading thinkers, policymakers, representatives of leaders from the private sector, how to think about the global macro challenges that face us and will face us after COVID. And today, I've got a great and big topic, remaking international cooperation and the role of private companies and governments and how they can work together. And two terrific leaders from the private sector and from the public sector. So I'm first going to introduce, and I'm not going to spend a long time on introductions because they're both so eminent that first of all, you will know them, and secondly, it would take too long. So first of all, Ajay Banga, who is now the executive chairman of MasterCard, having been president and CEO for 11 years. And he has had a long history, a varied history, not just in financial institutions, he was in Citigroup as well, but also Nestle, Pepsi, and so on, and working in India and in the US. And importantly, he is a member of the Peterson Institute board. And then Senior Minister Tharman, who is from Singapore and is chair now of the Group of 30, which is a body, unlike the other Gs that are just made up of governments and leaders, of political leaders. This is a body that brings together academics, financial experts, former policymakers to think about how to work together to solve global problems. And it began more looking, I would say, at economic and financial issues. But their most recent report is looking at the corporate sector, actually, which is interesting. And of course, I must mention also that Tharman was the chair of the International Monetary Fund's main policymaking body, the International Monetary and Financial Committee, IMFC. And so in that role, he saw a lot of the challenges of bringing together the international situation. So I want to turn first, if I may, to Tharman. There are so many global challenges that we face, but perhaps one of the biggest is what's going to happen to growth and developing countries, and how can they prosper in a world that is increasingly fragmented. So Tharman, would you like to give us your take for what you see as the major challenges and the main important ways that governments and others need to address those?
Well, thanks, Caroline, and thanks very much to the PIIE for having me together with Ajay and yourselves. Maybe I'll start with a few very broad remarks. In the last 30 years, we've seen a reduction in global inequality between nations, at the same time that we've seen an accentuation of inequality within nations. Both the increase in extreme wealth in places like the United States, but also the sense of stagnation in the broad middle of society. Those two things have gone together. That gradual convergence of the developing world towards the standards of living of the middle and higher income world, and at the same time, a sense of stagnation and unease within the advanced countries. And I think what we now face is the risk of a rollback of the first, in other words, a rollback of that process of convergence of the developing world with the advanced world, at the same time that we have an exacerbation of existing inequalities and existing problems of social mobility in the advanced countries. And that's not a good combination. That's a very bad combination. And these twin divergences are a very real risk in the decade to come. There's already a very immediate risk in the developing world because COVID has already pushed a very large number of people back into extreme poverty. Something like 150 million more people will be in extreme poverty by this year. There's an extreme risk because vaccines are not getting rolled out globally anywhere near the pace that's required, even by the most optimistic of projections and the ambitions of the COVAX initiative, for instance, which merely aims to achieve 20% of every population being vaccinated by the end of the year. We're going to find it very difficult to get that. But even 20% is far from herd immunity, which means we have a real risk in the short to medium term of new reservoirs being created for the virus. That's the basic set of divergences we face. But on top of that, we have the intrinsically global challenges, the challenges of the global commons. The pandemic itself is, of course, the challenge of the global commons, and this will not be the last pandemic that we face. And then we have the ultimate existential crisis of climate change and the continuing and accelerated loss of the world's biodiversity, which gave it its natural resilience. So those are two very large issues to do with the global commons, overlaid on these basic divergences. The fact that a large part of the world may once again be moving further away from the advanced world. And second, the fact that within the advanced world, you have this great sense of unease, this sense of social stagnation. So we have problems, and we have to address them. And if there's one good thing coming out of the war, but it was coming out of war, the US was by far the dominant global player. And you had Bretton Woods, immense challenges at the time. No one knew if the world was going to be reconstructed and if peace could be regained. But we're not in a Bretton Woods world because we do not have a single dominant player, economically, technologically, and even in terms of power and influence. We no longer, and we're not going back to that world anytime. So we cannot think of the same grand reconstruction of the global order to address these fundamental challenges of the developing world, of pandemic finance and avoiding future pandemics, and of climate change. But we do have, in those three major global challenges, a real opportunity for the US and China, and the US, China, Europe, and the other major regions, recognizing common interest, recognizing that there's common ground, and recognizing that there's no zero-sum game in climate change, there's no zero-sum game in avoiding and mitigating the next pandemic, and there's no zero-sum game in providing better systems of development finance for the developing world. It's a win-win game on all three counts. And this is actually a real opportunity to develop collaborative arrangements, co-investments, and a new form of cooperative internationalism around the major challenges that everyone faces, for which there's no zero-sum game. And if we can do that, both multilaterally, as well as by forming clubs of like-minded partners and trying to grow those clubs, I think we have a decent chance of first and foremost addressing those three major global issues, including the existential one, which is climate change, as well as avoiding a constant further drift into what you spoke about, Caroline, which is the fragmentation of the global order, particularly between the US and China, which is really the risk of bifurcation, but it's more than the US and China. I think we've got to do everything we can to avoid that gradual setting in of entropy globally. So I'll stop there.
Thank you so much. And that is a terrific overview. I must say that I hope very much that you're right, that the that the sense of crisis will bring together this understanding of, as you put it, there's no zero-sum game. I certainly think that's true. I may be biased by my past and working in groups from the United States. I usually found that there needed to be some leadership as well as cooperation. And of course, one of the things that people feel is is perhaps a zero-sum game. Not that we need to talk about it here, but is about power. I was thinking of that as you were discussing it. But Ajay, I'd like to turn to you and also ask you, one of the things that is certainly not zero-sum, and another area for hope, really looking forward, is on innovation and digital technology. But at the same time, that's another area where we see this potential decoupling. So I wonder what you would have to say, thinking about those issues.
Yes, thank you for having me, and it's a pleasure to be on with Tharman again. And as always, he's set the tone of the bigger picture of the issues we're all facing. I think that digitization is an interesting element that fits a little bit where Tharman was going. I think digitization can be a great plank for the cooperation that he was referring to. But there's one side of digitization that worries me, and then I'll come to your answer specifically. And that is the issue of it's almost like digitization itself has led to a 0-1 way of thinking. Friend, unfriend. Like, dislike. Cancel, don't cancel. And I worry a little bit about whether the 0-1 bits and bytes that we do to write computer programs is impacting the way we're thinking in the digital world about how to connect with people across what is inevitably a series of grays rather than pure black or white. And leadership requires a way to find the right balance in those grays. And I think merely my way or the highway feels like a very awkward way of conducting ourselves in a world that's going to need, as Tharman said, cooperation, coexistence, multilateralism, like-minded partners, coalitions of the willing, that requires a very constructive way of thinking, which I don't think, I'm sure we have enough of in the way we're working today. But back to the constructive side of digitization for a minute. I think what COVID did actually, Caroline, was to exacerbate an already existing trend, which was happening all around the world on digitization and its embrace, just as it probably shone a stronger light on inequity and in fact, again, exacerbated that trend as well. But inequity had been growing in our societies for a while. It's made it much worse over the last few months, I would say. And then, of course, the disruption in travel and the change in the way people are perceiving supply chains is also something that had started years ago, partly because of domestic political constraints and partly because of policy rather than health or nature. So there's something going on here, which is like we fast forwarded, both with digitization as well as in other trends in society with what happened over the last 12 months to all of us. So I think digitization, the way we see it, take a look at the way people are shopping or the way people are interacting. The change across age groups is amazing. Those who were even uncomfortable earlier now have embraced it as a matter of necessity. On the other hand, if you were a business or a citizen who was not participating in the digital world, life has been very difficult over the past year. So small businesses in particular, which are the lifeblood of all our economies, and they're 90% of businesses and 50% of employment. And in some countries, by the way, in the formal economy, they're 40% of GDP in the formal economy. If you included the informal economy in those countries, maybe Tharman's got a better idea than me, but I would say it's probably 60, 70% of the economy of those countries, including the country I grew up in. And so I feel like the ones who are getting impacted the most in this are SMEs. And some of them have done well. They've gone online. People, companies, and governments, us, others have all helped them. Those have done relatively well. Others have struggled. And so coming out of this, I see, I'm not sure that everybody will only shop online. I think there will be a swing back to the mean a little bit. The mean may have moved from where it was. There will be physical shopping. There will be physical interaction. You can see it already in parts of Asia where the recovery has been stronger than it has been in the Western world, both in terms of the virus as well as the economy. But I think you can see that that trend is there. The fragmentation aspect that Tharman was going on to is another little interesting aspect for digitization. for large companies, coping with multiple standards on the digital front has certain challenges to the operating model and our cost model, without a doubt, but we will cope.
Manage it.
When you take away standards from SME, you take away the level playing field that otherwise digitization was creating for them, which was it was taking away the arbitrage of distribution advantage that only big companies had. It was taking away the arbitrage of being able to conduct business as a lady with a fashion boutique in London, which otherwise she could not have done in the past, to sell in 30 countries around the world. This whole absence of standards, the fragmentation of standards, I think it will hurt small businesses disproportionately. And to me, that is a clarion call for trying to put the brakes on what's going on in a constructive way. And that to me is kind of where I'm coming from. The rest of us, in fact, for a company like mine, Caroline, funnily enough, it may be an opportunity because somebody will be required to bridge the gap between the standards. So this is a perverse result of this whole thing. And that's where I'm coming from.
Yes, that's very interesting. And we've seen, of course, that large companies have been doing well, including in the tech sector. And for all of the dislike of them and challenges, and last month, I think, was the month that I discussed that issue with Diane Coyle and another person. And but we see that the measures that governments tend to take are ones that are harder for small companies to address and easier for big companies to address. And I wonder, Tharman, I don't know if you see on this issue, or maybe, and I'll come back to you, Ajay, is there scope in this field of digital technology to promote some global standards or global standard setting? Or is that an area where the decoupling is just going to proceed?
So thanks, Caroline. I agree with Ajay very much. I think there's both a degree of confusion on this issue in some of the public debate, as well as a degree of deliberate obfuscation in the interest of protecting some domestic players who are usually not the SMEs, by the way, as Ajay was saying. I think privacy of individual data is too often used as a fig leaf for economic protection of certain incumbent domestic players. If you think about it, so if you think about it from the level, from the perspective of an individual, I mean, no one wants everything about themselves to be shared with the rest of the world, or with all their friends even. But privacy isn't everything, because certain basic data on health, for instance, has to be combined. It has to be shared in order that public health can be attended to. Basic data in finance on payments has to be shared in order that fraud and money laundering can be detected. Data aggregation is essential for both social benefits that benefit individuals and benefit societies, but it's also critical for economic growth, to curb the bad things in the world, as well as to create the good things through innovation. And the point that Ajay is making is that if you don't have common standards, if you don't have interoperability, including on technologies, software and hardware, it's not the big boys who suffer, the big boys and girls who suffer. It's the small players, because they find it much more difficult, particularly when it comes to cross-border transactions, access to markets, access to credit, access to knowledge. They find it much more difficult than the big players. And it's the big players that will perform that bridging function and earn some rent from doing so. So I think there's a great deal of confusion, but I think it's sometimes deliberate obfuscation in order to protect some domestic players. it is an area which we are working on. And Singapore is one of the very active members of the international community, together with Japan, with New Zealand, with Chile, with the European Union now, with Britain, advancing, both working with the WTO on this. They had a joint statement initiative, typical international official language, joint statement initiative, but let's call it JSI. Plus, we're working on bilateral and plurilateral or club-like digital economy partnership agreements. And what they essentially do is to build those common standards, recognize digital identities in each country. So you can use one identity for cross-border transactions, and essentially trying to open up markets for the small players, particularly cross-border markets. It's a real opportunity for the developing world. And if we don't open up and create these new rules of the game, at the very least norms, but also some rules of the game, to allow this automatic recognition of different country standards and ideally to bring everyone onto the same standards, I think we are really creating a further hurdle for the developing world in this coming decade. It's a digital world.
So Ajay, how does that seem to you from the point of view of the private sector? I mean, does the club of governments figuring out rules make sense, or is this something that you could, that from the point of view of the private sector, it would be better if the private sector were doing these rules? And how do you see that in your, I know you speak a lot to governments, you're an international global leader, and how do you see this separation in a way between the governments that are trying to fix this issue and your company? What's your reaction?
So, Carol, I don't think the private sector can do it purely by itself. I think data is a common good, and there is no way that a government should not have a role, along with the private sector, on having a constructive view about how to manage that common good. That doesn't mean that people can't make money out of that common good, but that also means, therefore, that guide rails and a set of principles are required. I'm actually where Thurman is on this. In fact, my last trip to Singapore, I was in a meeting with him when a very interesting conversation came up, aside from all the stuff about consumer data. And that was the point, that people and policymakers completely misunderstand how closely manufacturing and services are now intertwined, and services in turn rely on data. So jet engines are sending information all the time about their performance, so you can download when they need maintenance. Cars are sending information all the time about the car, and so on. B2B data should have no concerns among people's minds around privacy. I get the privacy aspect at a level on consumer data, and I think even there, talking up privacy, I don't understand how privacy is important in a cross-border flow, but you're okay giving it to a big company domestically. How is that any better for a citizen's privacy than giving it to a big multinational? I don't get it. That's such a colonial way of thinking that I think it's a very old-fashioned excuse being used to help bigger companies get control of data. That's the wrong approach. First of all, for a consumer, privacy and security are both my right. Why shouldn't I have both? Why do you make me choose one with the other? Why should I have to do a 0-1 again? This is all part of the grays that I was referring to. That's where Thurman was going with this. I am exactly where he is. I think there is a constructive role for the public and the private sector. I'll tell you my view, and I'm saying it so maybe he'll carry the idea. I've been saying it for a while in my International Chamber of Commerce chair role.
Yeah.
I believe, like after the last financial crisis, people like Thurman helped to formulate the Financial Stability Board at the G20 level, where people like him who were regulators, policymakers, ministers, along with some form of academics and central bankers, were able to create an informal club that said, do no harm to each other as we really fix the financial system for tomorrow. Constructively engage, do the right thing for your country, but make sure that global flows and global interaction between financial systems remains robust for the next many years to come. I would argue one of the reasons why we have done better in this crisis is the existence of the FSP. It helped central bankers and policy leaders in countries really turn up the volume on the kind of impetus they had to provide to help their economies, but do it in a constructive way. Why should we not have something like that for data and technology? Why should we not?
That's a terrific
And so that to me is the first point. The second point on digital identity and the universality of that digital identity. I think digital identity can be provided in a way that actually gives the consumer back their privacy. So today, if you were to buy a case of wine and the FedEx guy comes to deliver it to your doorstep and needs proof of your age, you give them your driving license, which she or he takes a photograph of, and it's now in some FedEx server. If you think about that, now your photograph, your full name, your exact date of birth, probably your national ID number, a driving license number, a national ID, NIC number in Singapore, something else is on that license. That's enough information to open a bank account, which you just gave willingly for a case of wine to somebody you'll never meet again. That's wrong. You should be able to create a system by which a trusted provider goes to different sources, government data, bank data, your cell phone company, and is able to bring back a yes/no answer on whether you are there and you are, and your age is above what it is, and certify that so that I actually achieve the end, which is you're above the age of 21 and you are who you are and you're at that house in Washington, D.C., and yet I give you back your privacy. I don't see why we can't do this. But we will not be able to if there is not a constructive conversation between policy leaders and companies in a safe place like the FSP for data and tech kind of idea. That's what I'm propagating for.
Thanks. Well, that's a great idea. Yeah, I'm sorry, go on.
Sorry, so just to round off that point and to make sure that what Ajay and I were saying is not misunderstood. There is a very large space in policy making and in business practice that now allows for better protection of personal data, because as we know, a lot of personal data is being used without people even knowing it. But better protection of personal data, as well as growing markets, including growing cross-border markets for small players. There's ample space for achieving both of that. And the aim of the WTO's Joint Statement Initiative, the aim of our various digital economy partnership agreements, is to make that possible, to have recognition of standards, to have common standards, to allow the Internet of Things to work not just in the largest and most advanced countries, to work globally, to allow for interoperable e-invoicing, to allow for everything that allowed today's big countries to grow starting from when they were originally small, to allow that to happen to today's small companies. So allowing for growth and allowing for better protection of personal data is entirely possible. And we've got to do it by way of these agreements. And fortunately, because the technology has advanced, I mean, the technology in cloud services has advanced to where you can achieve both of that.
Thanks very much. I just wanted to comment that people are beginning to ask questions, which is great. If you could put those into the Q&A function. And also, some people have been asking me to mute when I'm not speaking because of background. I'm actually sitting in a quiet room, but maybe my connection is not that great. So I apologize for that. I wanted to shift gears a little bit and pick up actually on something that some people had raised in the Q&A. It's great to think about these ways of working together, and I want to go first to you, Tharman, because of your background and experience. You mentioned we're not in the Bretton Woods anymore, and we're in a more common world. We're not just got one superpower, but in another way, we're not in the Bretton Woods world, which is the big institutions we have, the International Monetary Fund, the World Bank, even the FSB actually, represent only a subset of countries. And I certainly know that it's very difficult to shift some of that balance. And with apologies to my European friends, Europe is heavily overweighted in the IMF, actually in the G7 for that matter. And I wonder how much of a problem that is for this fragmentation, and also for the competition, decoupling between the US and China, because it does seem as if China has moved to say, well, if we're going to be a rule taker, we want to be part of a rule maker, but we're not sure we want to be part of that club. And so how do you see that organizational? And I think you mentioned at the beginning, we can't rebuild, and I completely agree with that. I've spent far too long thinking about international architecture. It has to be something sort of functional. But how do you see that, Tharman?
So the risk of a gradual descent into fragmentation is real. We have ways of tackling this to avoid that risk from materializing. If I take the three big issues I spoke about, the two global commons issues, climate change, future pandemics, or the current pandemic itself, and thirdly, development finance. If you look at each of these three things, there's so much very obvious common ground between the US and China, as well as the rest of the world. And there are mechanisms and ways in which we can reform even existing institutions to tackle each of those challenges. So if you take the challenges of the developing world, and I should highlight the fact that all three of those global challenges intersect and get compounded in the developing countries, because it's one of the unfortunate facts of life that the poorer countries and the lower middle income countries will be the ones that get the harshest impact of climate change, and which are already seeing the harshest economic fallout from the pandemic, and may themselves become reservoirs of future infectious disease spreads. So addressing the challenges of development finance is in everyone's interest. It's not just for the sake of doing good for the poor countries. It's in the world's interest as well. It's the right thing to do morally, and it's also the right thing to do for global stability, security, and global prosperity. The existing set of institutions do not function very well as a system. They overlap in their responsibilities, the different multilateral development banks, all the different bilateral financing agencies. Sometimes they are overtly competing with each other, but it's entirely possible to get some coherence in the system. In other words, to work the system of multilateral finance as a system and not as different parts competing with each other. And there was, in fact, an eminent persons group report at the G20 in 2018. I happened to chair it, but I had very able team members, which came up with a set of recommendations which are now in parts being implemented. The concept of country platforms, where you have the World Bank, the ADB, or any other development bank working together in a team with some division of labor so as to be able to achieve much greater impact and coherence, greater development impact and coherence, is entirely achievable. And both the US and China are on board on that. In fact, China was a very thoughtful participant in our discussions, and it is on board on that strategy of working together with other players so as to achieve greater development impact. If you look at the whole issue of global financial safety nets, which is one which I hope we will soon achieve serious momentum on. It's an issue which is, again, a very obvious non-zero-sum game. The fact of the matter is, unless you're a fanatic for free markets, it's in everyone's interest to be able to provide some buffers for the developing world and small countries from the volatility of international capital flows, especially the sort of short-term money, the short-term portfolio investments. And it's entirely possible through the IMF especially, and the IMF working together with regional safety nets. So if you think about it, even if you believe in free markets, if you want to achieve growth, It's not a great idea for countries to have to impose their own capital controls or some form of capital flow management. That's something that's a bit of anathema to those who believe in free markets and capital flows. But neither is it a great idea for countries to build up their own reserves to provide their own insurance against shocks, because that itself hurts growth, because you've got to save up more instead of investing. And for developing countries, it's all right if you're Singapore or better off countries, but for developing countries, they should be running current account deficits, investing more than they save in order to grow, because that's what South Korea and Singapore did for decades. So building up your own reserves isn't a great idea either. So a global financial safety net is the way of avoiding those two things. It's a way of avoiding either building up your own reserves or having to engage in capital controls, which also hurts confidence and hurts investments. So if you believe in free markets and you want growth, you can't dislike all three things. You can't dislike countries building up their own reserves to have their own individual buffers. You can't dislike capital flows and at the same time dislike a global financial safety net where the world agrees to be able to provide quick assistance to countries when they need it. It's a trilemma. You can only dislike two things and you can't dislike all three. And the best thing to have is to have a global financial safety net so that you don't need capital controls, and you don't need developing countries having to build up their own reserves to protect themselves. And it's entirely achievable through a SDR allocation, and I think the thinking is finally shifting on that score, but also through permanent systems of quick assistance to countries when they face hot money outflows, when they face risk-off moments, when money suddenly withdraws. It hurts growth every time. For that country, it hurts growth for a span of countries that are associated with it, and it hurts global growth. And the thing is, it's not even expensive. It's not even expensive for the advanced world. All these have been problems of mindset more than actual cost. And we've got to stop pretending that we're in some perfect textbook world where free markets operate and growth is smooth and orderly. It isn't.
Thanks. I want to turn back to the corporate sector a little bit, to Ajay, because of course, sometimes the money flowing out is money flowing out because there isn't a good investment environment. But turning also, we've talked a bit about decoupling and the US-China bipolar or dichotomy. But you, of course, grew up in India. You're very familiar with other parts of Asia, Africa, where MasterCard works and does business. And are we, with our focus on US, China, and then Europe, kind of missing the area for opportunities? Is there opportunity for private sector development in outside those big areas? Is that where we should be looking for some, as you think of your company, is that where you also look for markets? I'll just mention one other thing. When I was working at Google, we had, as you may know, a sort of stream of work that was called NBU, for the next billion users of technology, and developed some products that were, and of course all of the digital companies are thinking about those big markets where there are a lot of people and it's not necessarily the ones we think about. So I'm interested in your view from with a private sector hat on, where are the attractive places to look for opportunity?
As it so happens, I'm the only one on the call with an actual hat on, but never mind. So back to your question about the private sector hat. First, I want to make sure we all recognize that while there are markets outside of the US, Europe, and China that I'll come to in a second, why they're very attractive for companies like ours, there is a timing issue with when investments in those are likely to pay off to the extent that you would need to be able to help the future stability of income flow of your company be in the right place. So you cannot ignore the developed larger markets or withdraw from those in some way. It's a kind of you got to do both. So back to the part about working on the others. Simple facts and numbers are very helpful. So of the world's GDP of plus or minus 85 to 90 trillion, about 9 to 10 trillion comes from three parts of the world where I think the opportunities are amazing. Africa, India, and ASEAN. So if you add those three together, I mean, ASEAN's about 3 trillion of GDP. And again, I'm rounding up. India is about 2.6, 2.7. Africa altogether is about 2.6, 2.7. You put those three together, you get about 9 trillion out of the world's 85 to 90 trillion. But you also get 47% of the world's population between those three areas. ASEAN itself is 650 million people and is a relatively more cohesive over the years economic area than it used to be some years ago. It's getting more and more cohesive, thoughtfully. You got Africa and India with large populations as well. So I think a CEO in a public company ignores the opportunity of Africa, India, and ASEAN at the peril of their successor. That's how simple it is. So if you want to be doing business the right way for the next decade, you better be investing now, and you should have been investing for a few years in those three very attractive marketplaces of tomorrow. Their growth rates, the expansion in the middle class in those markets, these are all in the self-interest of companies, and you should not ignore them. And we as a company and many others like us are quite conscious of that. By the way, it's not just to extract value by selling products there, but I think you also have to put your shoulder to the wheel to be helpful to governments and civil societies in those regions in a constructive way, because it's in your best interest for the middle class to develop in those regions, because that's what drives the consumption that most companies rely on for their future growth. And so, you know, everybody's doing it their own way. We've got our way, other companies have got their own way. But I think those three sectors of the world are amazingly interesting for the decade to come.
That's fascinating. And I want to go back to Dharma and say, those three areas, not India, but ASEAN and Africa, are actually quite underrepresented or unrepresented in many global bodies. When we talked already about the IMF and the World Bank, but also the G20, which doesn't have staff and resources, but can be powerful in bringing countries together, sometimes because leaders can agree on things and push their negotiators if there's a big goal, whether it's climate or global health or growth. And of course, India and China and other countries are in the G20, but ASEAN representation, African representation, South Africa's there, but not many others. So does that, if those are areas of development and growth and excitement for the private sector, how does one incorporate those in the global governance, if you like? Darman.
Right. Well, I think the question is especially acute with regard to Africa. India is an active participant, I think, in global governance and certainly in the G20. It has challenges which certainly overlap with Africa. South Asia has challenges which overlap with Africa, but Africa is the real issue. And both the major players as well as the global institution, the major country players, the US, China, and Europe, as well as the multilateral institutions, need to recognize and organize themselves around the opportunities that Africa poses. Africa is where the world's largest risks and opportunities are in the next 10 to 15 years. And we have to take both those things seriously. It has the largest risks in terms of prospects for new infectious diseases, for forced migration, and for the rise of global political extremism. It also has the largest opportunities by far. Africa has something like 60% of the world's uncultivated arable land. It has a large proportion of the world's unexploited mineral resources. And it has huge potential in doing something which Asia and some other regions have done, particularly East Asia, which is to exploit the potential of regionalization, the development not just of regional markets, but of regional supply chains for supply to the world. So if you combine the fact that Africa has tremendous agri-potential, not just export of commodities, but agri-manufacturing potential. If you combine that with the potential for regional supply chains that get around the rather fragmented production structure of Africa, allow them to have some comparative advantage and specialization across African countries, you can really get a formidable exporting region at a time when food scarcity is going to continue to be an issue. And if you combine that with the huge opportunities for investment in infrastructure in Africa and human capital in Africa, you have the potential for another whole phase of economic returns for the world that will be shared, will be realized not just for African nations, but for the global community. It's a huge opportunity, but it's not going to happen if you simply stand around and wait or hope that markets will do it. Markets will not do it because there's now a perception of risk that affects individual nations, individual developing nations, low income and lower middle income in particular. And we've got to organize development finance to mitigate that risk. And it's entirely possible. I spoke earlier about country platforms, but it's absolutely possible to diversify risk within countries and create synthetic asset classes that comprise projects across countries that institutional investors can invest in for very decent returns. And if you don't do it, the returns that investors want to compensate for risk are far too high for countries to bear. So we're going to bring the returns down by diversifying risk and doing the sorts of things that have been done in developed financial markets for a very long time. The way in which you pool together risks in order to make investors more willing to invest in individual projects, which they otherwise won't, because you package them together into a synthetic instrument. That's a well tried and tested plain vanilla approach in global finance. And we need to exploit that a lot more. We need to exploit a lot more the potential for political risk insurance that again involves more pooling, which is what NIGA is now embarked on very helpfully together with the other MDBs. So getting the system to work together as a system, not leaving countries to fend on themselves, not leaving individual regional development banks to have to solve problems on their own and raise capital on their own, but working the whole system as a system will bring together the US, China, Europe, the major emerging countries for the global good.
Thanks. We have, I'm interested in Ajay's reaction to that. We have a comment or question maybe from somebody in the audience, which is, refers to the three big challenges of climate, health, and development, and I think there's a lot in development that is about financial inclusion, that is about innovation, many things, and you mentioned finance. But somebody was saying these are issues that have been around and they don't seem to be great unifiers. There are actually, on the health front, we saw a certain amount of finger pointing about whose fault it was that the virus, that coronavirus got going, and now we have sensitivity about whether we're talking about a UK variant or Brazilian variant or whatever. And we know on climate that can be a divisive issue, although I feel optimistic that the world is coming together. And of course, financial inclusion, other issues. So maybe they're not unifying issues. And even development finance, we know China and the US have each tried to push different financing forms. So I wonder how a globalized system, how possible that looks to you, Ajay. And then there's another little question in there that you may have seen, which somebody put saying, well, we can see that it doesn't really work fairly for developing countries. If you just look at remittances, the fees on remittances, which is something that we used to try to combat in the G20 are so much higher than bank transfer costs between developed countries. So that's a little bit of a niche issue, but if you have a comment on that, I'd be interested in it, and I'm sure others would. And then a comment on the more general prospects for big coming together.
Yeah, so I mean, let's just get the remittance one first. There is no doubt that the fees around remittances are an issue in the world system. There's no doubt. The challenges have been that the way they have been created and serviced over time is through parallel systems that don't follow the methodology of the large-scale banking transfer methodology. It's other things that do it. When you create an agent infrastructure that is separate from the way the rest of the financial system works, that agent infrastructure needs to be compensated and creates its own cost system. It's a problem. And over the years, many times people have made attempts in the banking system to intervene here. The problem normally ends up with the absence of digital identities and know your customer protocols at both the receiving end and the sending end of that remittance. And that is why the digital identity we were talking to earlier is actually, to me, a real game changer. Not just for those who are well off, but actually really for those who would benefit from having that identity. 2 billion people in the world, Caroline, do not have a formal identity from their governments. 2 billion. A large amount of the remittances happens between people in that segment of society. There are others too. Like if workers from Singapore don't have that issue. You go to Singapore to work, you get an identity, otherwise you don't get in. When you get in, you have that identity, you can open an account, you can send money back. Singapore is different from many other examples. And there's something to be learned from the way in which they have managed that process. But I feel like remittances is a real issue and an issue that needs tackling. But the answer is not to go and hope somehow that the presence of a mobile phone will transform remittances.
Yeah.
It doesn't work that way because you still have to have an account somewhere. And the account still requires an identity and a know your customer and all that stuff. So it's a deep issue. We could go into it for another hour and I'd be delighted to help. The earlier point about the playing together and participating in this, my general view is that whenever there are opportunities in the world, tribalism will rear its ugly head. Tribalism is part of human nature. We are beasts that operate based on my presence versus yours, my control versus yours, my ability versus yours. But I think there is within us, again, in the series of grays in the middle, there is a lot of space to improve from just mine versus yours. I think Thurman's trying to draw us to that space. And history has proven that like-minded people can come to that place time after time. The circumstances today may be different from what they were after the Second World War, but it was very easy at that time to have an us versus them idea too. And yet the United States and the Allies decided that that was the time to be thoughtful about investing in the world for tomorrow, as did a number of other countries. In the same way, there should be no winner takes all in the world like this. We need these cooperative institutions and ways of thinking, whether it be development finance, whether it be access to healthcare and the like, that makes a difference. I mean, look at the vaccine. We have a live example right now. 1 year ago, there was not a single person who believed we would get vaccines in 1 year. In fact, if you said you were going to get vaccines in a year, most people thought you were nuts. Let's fast forward 1 year, and not only do we have vaccines, we have them at a relatively large scale. Do we have enough for the world? Not yet. Are we better off than we thought we'd be a year ago? Yes. Do we need to manage the equity in the distribution of these vaccines for our own self-interest? Because if you don't, the variants will come back to hurt you. Whatever they be labeled and called, a UK variant, a Brazilian variant, some other variant, they will come back to hurt you. And so there is work to be done. But the vaccines came because of sharing of medical knowledge and data and testing across many borders. We can do it together if we work for it. It's just that why should we only have our back to the wall when we do it is a deeper question. That's the tribalism issue.
Yes, that's right. And somebody has asked the question about, is populism, and Tharman, of course, you referred to this at the beginning, is populism inimical to this kind of coming together? I'm hopeful that some of the populist instincts come from people being understandably and justifiably fed up with a failure of their living standards to grow. There is an alternative, less happy thought that cooperation is less because some of the people who used to feel on top now feel their positional good threatened. But I think that I'd like to get your reactions, and we just have a few minutes left, but your reaction, Tharman, to the notion of, is populism something that should be grappled with on an international cooperative basis, or is it really separate in different places and coming from different issues?
I think there are lessons to be drawn from the way in which different countries have either kept populism at bay or have failed to. But that's about drawing of lessons rather than solutions. The solutions are domestic. The solutions are domestic and political, and we've got to draw lessons from each other in that regard. I'll come to it in a minute, but before we lose Ajay's point about vaccines, I want to say that first, it was a triumph of global cooperation that vaccines were developed, approved, and were able to move on to manufacturing within a year. It was a triumph primarily of global science. The epidemiologists, the immunologists who developed the vaccines, the virologists who sequenced the variants. It was a real triumph of global science, unperturbed by boundaries, sharing data, and it was really a global team. However, that was not the case for the other parts of the chain of spotting infectious diseases early, preventing them from spreading across boundaries, being able to manufacture vaccines at scale and distribute at scale. And that's why we are in a very serious problem today. And there are many lessons coming out of COVID that we have to fix. And in fact, there's a G20 panel, which Ngozi, Larry, and myself, Larry Summers and myself co-chair, which is addressing the future financing system required to be able to address all these problems. You do need vastly more R&D in emerging infectious diseases. We need systems to prevent zoonotic events from happening, and it requires financing. It requires systems of surveillance and data sharing that Ajay spoke about. And critically, a new area for public policy. You need to use public money to co-invest with the private sector in manufacturing facilities, in advance of when it is required. And that's a key lesson, because COVID has taught us that speed is critical.
Yeah.
We can't manufacture at scale and fast enough for the world's population, the vaccines. You get new variants developing, and the variants develop faster than you can vaccinate the world's population. So very important lessons there. But we've got to recognize the importance of public investment and recognize the importance of the global good, that is a global public good. Coming to your question very quickly, I would say we cannot tackle the international challenges we've been talking about if we do not address domestic polarization and the sense of exhaustion environment. That's the way I'll describe it. There's just some exhaustion there. You can see it. You can see it wherever you are in the world by just tuning into any of the major television channels. And you have to address that. And it's not as if it's an either or. It's not as if there's some trade-off between keeping borders open, investing in the global public good, versus addressing domestic challenges. Because If you look at countries that are equally open, you'll find a wide variance of domestic outcomes. The Swedens and Singapores of the world have managed to sustain steady median income growth, steady growth of incomes and lively standards of living of a broad range of the population, although we've got more open economies. And we're also more exposed to the latest global technologies. So openness has not been a very good predictor for domestic polarization. It's not been a very good predictor for whether or not you get middle-class stagnation. It is domestic policies that are the most important differentiator. And that's why we can take lessons from each other, not from whole countries. I mean, no one is, it's not as if Singapore or Sweden have invented solutions, but we have borrowed lessons from everyone else. Certainly Singapore has. There are lessons even in the United States. I mean, there's some things which we wouldn't want to copy in the United States, but there are lots of things in the United States which are really worth emulating. So we've got to draw lessons from specific institutions. Sometimes there's specific city examples. Sometimes there are examples of what are being done between universities, community colleges, local employer associations. We've got to work a lot harder at getting the state not just about the size of a budget deficit or a budgetary package. It's about the role of the state as an activist, working together with community, together with employers, working together with unions and other social partners. And that role is what distinguishes some countries from others in whether they've been able to avoid polarization and the inevitable drift towards populism.
Thanks very much, Tharman. And I'm going to give the last word to Ajay before we end and ask if he has reflections on that and also on the importance of private and public working together. With just one thought, you're absolutely right, Tharman, that in the case, and both of you, the vaccines have been fantastic. But we also see that even in the US, rich country, it's been very difficult or the challenge for public policy of getting those vaccines out in an equitable way has been difficult. Although in this case, the US is getting a bit better than some of the countries. It's not about being rich or poor, that ability to function in an equitable way. And of course, India is the place where many, many vaccines, the Serum Institute, are manufactured. So that's another part of our global interdependence. But over to you, Ajay.
So I think the issue of public-private cooperation to me underlines everything we need to do, because there is not enough money in the world of government or philanthropy to solve the kind of problems we are discussing, whether it be climate change or inclusion or health in this form. Clearly, there's inadequate resources to be thrown at it. We can create facilitating systems of the type that Tharman referred to, the developmental systems, the global safety net. But eventually, everything he's talking about is private sector capital on top of that. So I believe for a long time, and I've said this publicly, you need to get the private sector's capital, ingenuity, technology, and people to the party. Otherwise, this is hard to find the right solutions for. For that, the private sector has to earn the trust of civil society and government. This is not it's a little bit of give and take going on here. And the truth is, over the last few decades, a lot of the benefits of the way the global economy has grown have not been felt by people because both the government and the private sector may not have played as good a role as they should have played in ensuring that we took more people with us. Now, we can learn from that. We can all try and do it a little better, but we must, because without trust, you will get a separation of the two parts of that private-public sector game, without whom we cannot get to scalable solutions. We just have to have trust and a way of operating.
Thanks. That's a great ending. And I just want to comment that a number of people have said, well, you haven't really talked much about China. I think we've been talking about global cooperation, and we will certainly come back to the issues facing China and China in the rest of the world, as well as other countries in later sessions. But that was fabulous, not surprising, from Ajay Banga and Senior Minister Tharman. Thank you both very much indeed. good day, good night, good evening, good morning, and so on. Bye-bye. Thank you.
Thanks. Good night. Thank you.